Picture this, XRP at $10 per token. It sounds unbelievable, right? But what if I told you that it could actually happen by securing just 0.1% of a market worth a jaw-dropping $1 quadrillion? Yes? You heard that right, quadrillion dollars with a Q. And the craziest part, we're not even talking about a far-off dream. This could actually be within XRP's reach sooner than you think. So in this video, I'll break down how capturing even a tiny slice of the massive derivatives market could send XRP's price to incredible heights. I've got the numbers, I've got the facts, and I've even got Ripple's strategic moves that could actually make this a reality. So if you're wondering how XRP could go from its current price to this, well, I'm holding the answer right here on my phone, but with a little twist. So stick around and see how this kind of plays out and why you'll want to watch this video from the start to the finish. Trust me, you won't want to miss how XRP could be gearing up for its biggest surge yet. So grab a seat, hit that like button, and let's dive in. What if I told you the biggest market in the world might not be what it seems? $1 quadrillion is a mind-blowing figure, but is it actually real? Well, the derivatives market is often cited as having a kind of notional value of over $1 quadrillion. But here's the catch. Notional kind of value doesn't always reflect actual economic exposure. So let's talk about what is the derivatives market, right? For those who might not be familiar. The derivatives are kind of financial contracts tied to an underlying asset like stocks, commodities, currencies, or even cryptocurrencies. The notional value is the total value of all these contracts if they were to be kind of exercised. Now, that's not necessarily the real money changing hands. It's more the face value of all the outstanding contracts. The gross market value, which may better reflect genuine economic exposure, was closer to around $17.1 trillion at kind of mid-2024, at least according to some estimates. So why the discrepancy? Well, the difference between the $1 quadrillion notional value and the $17.1 trillion gross market value often kind of confuses people, in the same way that market cap within crypto also finds itself to be very confusing to some individuals, right? Basically, in derivatives trading, you have multiple offsetting positions. So you can have one contract cancelling out another. So the real economic risk is a fraction of the massive notional value. Still, even a fraction of these astronomical numbers can be huge in practical terms. Now that we kind of know that the market, or at least what the market scale is, and the difference between notional and actual exposure, let's look at what would happen if XRP taps into a tiny slice of that market. Prepare to be amazed by the numbers. Think a 463% price jump is, well, too good to be true? Well, let's run the numbers and see why some believe it's not just hype, right? The article suggests that if XRP captures just 0.1% of a quadrillion-dollar market, that kind of equals a $1 trillion market share. Now, assuming that XRP's maximum supply is around 99.98 billion tokens, a $1 trillion valuation would translate to approximately $10 per token. As of the latest data, XRP is trading around the $2.40, and that's meaning the leap to $10 would roughly be 463% increase. Now, for crypto veterans, a 400% plus gain isn't the most outlandish thing ever. We've seen tokens skyrocket higher in much shorter timeframes. Now, you might be thinking, right, but for the new to the space, and a jump like this might seem or still kind of be jaw-dropping, right? And it's actually certainly not guaranteed. It's important to remember this. But some market commentators actually claim that $10 might be conservative by the end of 2025's bullish market, especially if regulatory clarity does in fact kick in, institutional adoption picks up, and Ripple manages to integrate deeper into the global financial infrastructure. Others, of course, argue that these price targets are purely speculative. So analysts who are bullish on XRP point to Bitcoin's own rise as a historical kind of precedent. It wasn't too long ago that BTC soared from mere cents to tens of thousands of dollars, right? So while past performance doesn't guarantee future results, it's it kind of shows how quickly the crypto markets can evolve. So for a kind of simple math perspective, 0.1% of a massive derivatives market does indeed produce a staggering figure. But how likely is it that Ripple can tap into such a space? Let's dive into Ripple's strategic moves that hint that this might not be kind of a pipe dream after all. It might actually be something that can hit reality. Have you ever wondered why Ripple seems to be making waves with major financial institutions, right? Their recent partnerships and investments may reveal a kind of grand plan to break into derivatives market. So Ripple has been kind of proactively positioning itself to play a role in the derivatives ecosystem, notably through partnerships and key memberships. So Bitstamp, one of the longest standing crypto exchanges, is launching a derivatives platform. Reports are floating around that Ripple could play a part in this new initiative. If true, it could mean that XRP might become a more prominent vehicle for derivatives trading. Now, in August of 2023, a little while ago now, but Ripple did join the International Swaps and Derivatives Association, the ISDA. Now, the ISDA sets critical guidelines and standards for global derivatives markets. So by joining Ripple, Ripple essentially signaled it's serious about aligning itself with mainstream financial frameworks and possibly weaving XRP into that system somewhere down the line. Now, Ripple also invested $25 million in BitNominal, a US-based derivatives exchange, to help it expand its crypto derivatives offerings. Now, this isn't just kind of pocket change. It's a kind of strategic move that could pave the way for XRP to be listed on new derivatives products, exposing the asset to institutional traders who drive a large share of the derivatives volume. Now, the significance here is that the derivatives trading often kind of involves huge sums of capital, right? Institutional investors typically lean on derivatives instruments for hedging and speculation. If XRP integrates well in these environments, liquidity could surge, which in turn might boost its price, especially if demand grows while supply remains fixed. Still, a closer look reveals a few red flags, or at least some caution signs. Let's discuss the challenges and what the critics say about this very ambitious price target. So, is the $10 prediction a no-brainer, or are we ignoring some serious roadblocks? Well, the derivatives market's kind of notional value might be very deceiving, right? In the same way that we have with market cap. And, well, there are still a number of variables that could derail XRP's path to securing even 0.1% of it. Skeptics argue that citing a 𝗕𝗃 trillion figure is misleading because it doesn't reflect real economic exposure, only to kind of the sum of the face value of all the contracts. And this is the same as market cap, right? You cannot liquidate all of cryptocurrency. Let's take Bitcoin as an example. You can't liquidate every single Bitcoin instantaneously and pull out trillions of dollars. That is kind of a theoretical valuation of Bitcoin, right? And this is the same for the derivatives market, right? You couldn't go ahead and take a look at the face value of it all when you have different levels of risk exposure or economic exposure, in the same way that you have with market cap, right? So it's understanding there's lots of different ways to calculate this, and obviously taking a look at it from that kind of notional value gives it a great big splashy headline, but it doesn't give you that kind of actual understanding of the amount of liquidity that's sitting there. Okay, in the same way that, you know, Bitcoin really has a realized market cap that is significantly, and I mean significantly, lower than the actual market cap that you might see from just the price multiplying by supply, right? So it's important to understand this notional value versus, you know, the actual kind of exposure or the economic risk associated with those contracts. But even if, you know, XRP does manage to capture 0.1% of the derivatives market, that 0.1% might not literally be, or at least might not actually amount to $1 trillion of actual capital, right? The real capital could be far, far less, you know, perhaps even just tens or hundreds of billions, you know, if we kind of rely on gross market value instead of notional value. So understanding the differences here are very important. So it's always great to have the speculative investment ideas, but the reality is usually somewhere in between. So regulatory clarity is also something to consider because it is still evolving for XRP, right? You've got lawsuits especially the SEC versus Ripple case, can impact its adoption by major exchanges and institutional players. Though there's been progress, with how XRP has been wrapped, and, XRP, or pretty much any kind of asset to a degree, it is in itself is not a security, but how it is sold and the process in which you are basically selling, whether it's a cryptocurrency or a stock or whatever, is what makes it a security. And although the XRP itself is not a security, there are, of course, still some gray areas. You got the programmable sales on the exchanges not deemed as securities. Then you've got the sales of XRP to institutions, which are security sales. And so it's still up in the air until you have true clarity on the whole entire matter with what the SEC are appealing, whether that even gets kind of approved and they actually win that appeal, and all of those things that they need to kind of get settled. Once they settle, that is when you'll start seeing institutional players really starting to jump in on this. So though there has been progress, ongoing legal uncertainties, they can cause delays and reduce institutional uptake, right? Now, Ripple isn't the only player eyeing the derivative space either, right? You've got Stellar, Ethereum, and even Bitcoin-based products that might compete for the same share. Additionally, stablecoins are often used for derivative settlement due to lower volatility compared to typical crypto assets. So the crypto market is historically hype driven as well, right? While we could see explosive growth, that also means price swings can be extreme in both directions. Relying too heavily on best case scenarios might set unrealistic expectations. So we've kind of seen grand predictions for many cryptos before. Some have come true, like Bitcoin's early price targets, while others fell short. It's important to keep a balanced perspective here. Yes, the upside potential is very significant, but the risks, they can't be ignored either. Now, no one can say with absolute certainty that XRP will hit $10 or even $20 in a year or two, right? But the pieces are lining up in a way that could make XRP far more integral, in global financial markets than it is today, at least at the point of recording. If Ripple can successfully navigate regulatory hurdles and continue to forge strategic alliances, well, it stands a decent chance of claiming at least a silver, or at least a kind of slither, I should say, of that massive derivatives market. Even a tiny slither can mean big gains for holders. So the question is, what do you think about XRP's future? Do you believe the hype, or are you more cautious? Let me know in the comments down below. If you did find this interesting, informative anyway, make sure to hit that like button, guys. I really do appreciate that. Help spread the content to more like-minded individuals out in the crypto space. But if you guys are thinking a little bit more bullishly and maybe you're interested in the $27 price prediction, you should probably check out that video right there if you haven't done so already. It's quite insightful.